Hi, everyone. This is Jason Bjork of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. She worked on Wall Street. She worked at the Dallas Federal Reserve Bank for almost 9 years. She writes a free weekly email newsletter, and she's the president of Money Strong. And her new book out, which is why we want to have her back on here so soon, is Fed Up, an insider's take on why the Federal Reserve is bad for America. Danielle DiMartino Booth, thank you for joining me again.
I'm happy to be with you again, Jason. How are you?
I'm pretty good, and I just finished reading your book. I thought there was a lot of good insights there. Obviously, I'm sure you're going to ruffle the feathers of a lot of the PhD economists at the Federal Reserve if they actually take the time to read the book. But I want to get into the book now since we have limited time. You talk a lot in your book about the 2008 financial crisis and the Fed's role. Do you think any major mistakes that caused the 2008 crisis have been fixed or learned from by Janet Yellen and other PhD Keynesian economists at the Fed?
I don't think that enough was learned, and that is exactly the catalyst that drove me to spend over the last 2 years writing Fed Up, because we had a tremendous opportunity coming out of a financial crisis to recognize the error of the ways, to understand that the models that had been used failed to capture the financial crisis that was barreling towards us, and we inside the Fed had an obligation at that point to revisit our methodologies and our models and come up with new ones, come up with brand new mousetraps.
I think what happens at the Federal Reserve is it's very politicized. They claim to be independent, but, it's very highly politically connected. And, the track record of these models, Danielle, no one wants to talk about this. These are the same predictive models that said Donald Trump had no chance to win the election, that Hillary Clinton was, 98% likely to win the election. These models were predicting, Brexit wouldn't happen. So why, after the long-term track record of these models, saying that real estate prices wouldn't go down, why do these PhD economists stick to these models then?
Well, I don't know that there is necessarily a lot of ingenuity and innovative thinking going on. The Fed conducted a study of its own, Jason, that showed that even when they tried to replicate the outcomes of models and hypotheses, that they could not be in 51% of the cases. So again, I'll go back to what I said earlier. There is a recognition that something has gone wrong. Some of these major economic conferences that have gone on over the winter, there have even been stories in the media about this collective existential crisis they're having. But the problem is that so many modern day macroeconomists have been trained in the exact same school of thought that they've crowded out other ways of thinking to the detriment of world economies, and especially our own.
Now, you talk a lot in your book about groupthink, or you call it group stink, hubris, confirmation bias. I would like to see differing opinions at the Fed. Donald Trump really has a chance to do this with 3 empty seats on the FOMC. Do you think Donald Trump will do this, or do you think he needs, a weak dollar, low interest rates? Do you think he's going to put more of the same types of doves on there instead of actually making real change?
Well, we finally got something out of Politico in the last day or so that gave us a little hint that somebody is trying really hard to prevent Donald Trump from tweeting about the Fed. Because I think you would agree with me, Jason, he's been curiously silent on the Fed, and he certainly does have a great opportunity, but it is his silence that bothers me, and I worry that his top economic chiefs are trying to wave their hands in front of him and say, we get that you don't want to bring in more academic professors. We get that you got rid of the head of the Council of Economic Advisors as a permanent cabinet position for your presidency because you didn't want to bring an academic economist into the White House. We get how you feel about this, but you have extremely ambitious legislative ambitions, plans, and if you hope to pass any of this legislation, you better make sure that interest rates don't go through the roof.
When I look at, some of the proposals that Donald Trump has, I see, he claims he wants a weak dollar. He wants to have all these infrastructure spending, defense spending, build a wall. These things are going to be expensive. I don't see how he can have a strong dollar and have interest rates rising and be able to afford all of these things combined with tax cuts. So how do you see things then?
Look, I am really, really hoping, because whenever you start to hear rumblings about the attorneys aren't sure that this can be done, and that's what we've started to hear about reforming or kind of unringing the bell, if you will, of Dodd-Frank and Obamacare, which we know have been tremendous drags on economic growth, and we know that they've been terrible for small business formation. So I have my eye on the prize of tax reform. That is the one that I really, really, really hope gets passed, becomes priority number one for the Trump administration, because I think that it's where you could see the most in the way of direct and immediate economic impact, and I would follow that, number two, with infrastructure spending.
That's probably going to take a couple years for Congress to get that approved. We know the Democrats in Congress will be fighting that and blocking that at every turn. What also worries me, Danielle, though, and I had Peter Bachvar, your good friend, on last week to talk about this.
Peter.
Yeah, so Peter and I were discussing this last week, is, Trump does want to cut corporate taxes for small and medium-sized businesses, also large corporations in the U.S., but then he wants to institute, an import tax, and that could offset a lot of the benefits of tax cuts then if, there's higher costs then in the supply chain.
Well, look, I take Peter to heart, and I will back up Peter with a little anecdote of my own. My husband has been in the industrial packaging industry for 26 years, and his comment to me recently was corrugated prices have gone up 18% just since the beginning of the year. In my career, again, almost 30 years he's been in this one industry, he said that he's never seen prices go up this quickly. And here's my concern. I think that we could be staring down the barrel of a profit squeeze from two different directions. The Federal Reserve, especially the doves on the Federal Reserve, are being extremely political right now, in my humble opinion, by trying to be really aggressive about this tightening campaign. After all of this time, really? I mean, the economic recovery is going to have its 8-year anniversary come June. My concern is that companies are going to be squeezed in two different ways between commodities inflation and that of rising interest expense and tightening financial conditions at just the wrong time. Jason, we've been watching the Fed for some 30 years now come riding to the rescue every time the junk market went into convulsions. But I will tell you that with $2 trillion, I'm writing about this in my next newsletter, there are $2 trillion of high yield and investment grade debt maturing over the next 5 years, and a Fed that looks like either it's going to have a changed face and or allow the economy to slide into recession. We will see.
Yeah, I think there's going to be stagflation in the real economy. From the Fed's beige book last week, I think they said a lot of business owners are expecting inflation to ramp up. That would give us inflationary expectations and velocity and money picking up. I could see stagflation occurring, Danielle, in a number of different ways. If Trump is successful with some of his infrastructure and spending programs here in the United States, that would create wage growth. That would accelerate velocity of money. But if he's not successful, the debt problem would increase. There would be, higher import taxes, potentially a 20% import tax on imports from either China or Mexico, and that would raise costs in the supply chain. So I see a number of different ways for potential stagflation increase. You mentioned the Federal Reserve with politics there. If they do increase interest rates 3 times in 2017, they can easily, now that Trump has taken credit for the stock market increase, they can easily increase interest rates 3 times with small token rates and then blame it on Trump.
Of course they can. Look, I think that and I'm obviously I don't have a governor in my mouth to speak of, but I'm concerned that that Fed officials are blatantly trying to put the economy into recession to time it with the midterm elections so that they can flip the Congress back. I don't even think they're being bashful about it.
Wow.
I mean, they're talking about their blessed balance sheet, which is a fortress that they were never ever going to touch.
So you don't think the Federal Reserve will be able to reduce its balance sheet at all?
Oh, I think that it wants to. I just don't know if the yield curve is going to flatten and invert before they can really get aggressive about that. I mean, it looks like the March rate hike is completely in the can, And the markets are obviously very comfortable with the notion of that. But I don't know if we get to June and September and the Fed is going to have to slowly educate the public about the need to right-size the balance sheet, which is something I argued for years. And that is why I find it to be so highly ironic now that Donald Trump is in the White House that all of a sudden they're effectively talking about a double tightening of financial conditions, raising rates and allowing investments to start rolling off the balance sheet rather than continuing on with their reinvestment campaign.
Now, do you think the Fed has a lot of ammo left, or do you think they're intentionally doing this? They do have ammo, but they just aren't going to use it because it's, turned political, like you said.
Oh, I don't think the Fed has a lot of ammunition. Their own studies, and we've just discussed that their own studies are flawed, but their own research will tell you that QE did a lot of nothing for the financial markets. So you couldn't convince me that QE4 would necessarily do anything to ignite economic growth, again, at this late stage in the market as we sit here and celebrate the anniversary of the March 9th rally in the stock market.
Now, in your opinion, should any central bank be allowed to buy corporate bonds, stocks, and other private sector assets? Because, we have the Bank of...
No, absolutely not. I don't even have to think about that one. It was mission creep and it was credit allocation when the Fed started buying mortgages, and it is a further intrusion and encumbrance upon capitalism if they start buying things like corporate bonds and stocks. Look what American issuers did the minute Mario Draghi announced that he was going to be issuing, that he had really run out of sovereigns that he could buy, so he was forced into the corporate bond market. And look at what American issuers did. They rushed out and sold bonds because they know that they would be bought at a fairly price agnostic level. It's not the way markets are supposed to work.
Yeah, I mean, they've been manipulating interest rates for a very long time. And, when you manipulate interest rates, you're basically manipulating more or less every single market. You're manipulating asset prices. When I see these PhD economists like Larry Summers or Ken Rogoff talk about, we need more negative interest rates to force people to spend. Larry Summers was talking about, if they're in the next crisis, the Fed should expand its balance sheet even further and start buying, more private sector stocks and also corporate bonds like what Swiss Central Bank or Bank of Japan has done. That really worries me about the purchasing power long-term of the dollar.
Well, that gets us back to Donald Trump and the opportunity of a generation, the opportunity of the last 100 years to try and reshape the Fed. I will quote William McChesney Martin, who was the longest-serving Fed chairman, who said, "We need to have these PhD economists on staff because they do have something to add, but we only need to have them on tap, not on top. And when you allow them to be on top and stay on top for too damn long, then you end up with Ken Rogoff's theory that cash is not necessary and Larry Summers saying we need to be buying stocks. It's just ridiculous."
I have a listener question submitted from my friend Derek over at Woke News. D-Money, if you were put in charge of the Federal Reserve immediately, what 3 changes would you immediately make and why?
Well, could I be in charge of the world instead?
Okay, we'll expand it. You want to run the Bank of International Settlements instead?
Look, I think that part of the problem, and this is something that I bring up in the book, IndyMac was being closed by the Office of the Comptroller of the Currency while Janet Yellen, San Francisco Fed, was trying to extend a line of credit. Same day, same time. I think we need one really strong, really kick-ass banking regulator in this country to regulate all and bring in the same people Wall Street hires. Bring in the PhDs in finance. Bring in the best accountants money can buy so that you don't have regulatory arbitrage anymore and you're not one step ahead of the Fed or whoever your regulator happens to be at all times. And I would also make sure that the 1913 original Federal Reserve Act that mandates that people from a diversity of industries lead the Fed be enforced. And I would also redraw the lines of the districts to reflect the economy that we are today as opposed to what they reflect, which is the economy that we were over 100 years ago in 1913 when the districts were originally drawn.
Yeah, that's very interesting. There should be a Federal Reserve Bank in Los Angeles. They should be spread out and changed. The amount of Federal Reserve Banks we have, I guess the power isn't dispersed. You talked about this in your book. You know, the New York Fed just has so much power compared to the rest of the other Federal Reserve Banks. And we know now that there's large trading desks at the New York Fed. I mean, what are they even trading?
Well, they're trading that massive balance sheet.
Well, are they also, you know, going in and buying S&P 500 mini futures contracts? See, you know, there's been lots of talk of this, that someone goes in there at, you know, illiquid market hours, either right after the market's closing or early at 2 or 3 a.m. and, you know, buying S&P 500 minis futures contracts, or moving other markets around, you know, with high frequency trading algorithms. And a lot of people suspect that it's Federal Reserve related, probably New York Fed trading desk.
I'm just going to throw that one up to no comment. I have no idea. Some of the conspiracy theories kind of freak me out, and I just have to step back and say, we'll leave that in their hands to try and figure that one out.
Okay, well, my question is, you talked in your book how you don't think the Federal Reserve should have annual independent audits, but I think they should. We've gotten information that there was a Freedom of Information Act request. It showed that the Federal Reserve gave the European Central Bank a $10 trillion currency swap line to save Deutsche Bank and other European banks. Why shouldn't we allow independent audits of a central bank if they're going to go and, you know, give out almost interest-free loans for almost unlimited amounts of money?
Well, look, this is my answer to audit the Fed. If you put independent, objective people in there who absolutely have no agenda, then you're not going to need to audit the institution. If you keep it populated as it is, then go for it, audit it. Look, you don't allow the fox in the hen house if you're the farmer. But if they're not going to put independent, apolitical individuals into the institution, then there will be a continued need for their behavior and actions and monetary policy decision-making actions, et cetera, to be monitored and to be audited. But if you have the right institution, you don't need that. It takes care of itself. You're trying to treat the wrong disease.
Well, when I look back at, you know, the 100 plus year track record of the Federal Reserve, you know, I see they basically caused the Great Depression in 1929. You know, they created a huge credit bubble in the 1920s leading up to that after World War I. Since the Federal Reserve was created in 1913, the dollar has lost over 96% of its purchasing power. You know, I think the real economy in the United States has grown in spite of the Fed, in my opinion. I see, you know, endless amounts of economic landmines, whether you write about a lot of these. We have a commercial real estate bubble potentially. We have a subprime auto loan. I have a lot of friends with student loan debts. I don't know how they can survive as adults, you know, with their student loan payments and also, you know, a meager full-time job that doesn't barely pay their bills. Some of them have 2 or 3 side jobs in addition to their full-time job. So I blame the Federal Reserve for a lot of this. They've let, you know, Wall Street and Washington, D.C. spend a lot of money, and it's hurt Main Street.
I do not disagree with a single word you just said. I think that the Fed. I think that the main sin of the Fed, though, for me at least, came about in a post-Greenspan era because we were not always a country that required the creation of debt and credit in order to propel ourselves forward economically. We were not always this way.
See, what worries me in general, and I speak with my listeners about this, is if you agree with a lot of what I said, then why don't we work on, you know, drastically reducing the power of the Fed, handcuffing it so it can't, you know, drastically give out all these bailouts and loans. We know Ron Paul was able to get a one-time partial audit of the Federal Reserve while he was still in Congress, and they gave out $19 trillion in almost interest-free loans to large corporations, foreign central banks, the European Central Bank. So why is the American taxpayer, people who are holding dollars, Americans, why are we bailing out without any say in the matter, you know, basically the entire world economy or foreign governments, just because they think it's in our best interest? So, you know, I don't think there's going to be independent people like you want at the Fed. There's always going to be political bias people. So I think the Fed's power needs to be limited and audited, and then we need to work on ways to, you know, eventually get rid of it, because the U.S. was prosperous for many, many years without a central bank, if you look in its history.
Well, those notions worry me, Jason. I mean, and I'm plain and clear in the book. I do hope that we have politicians. It might take a greater financial crisis than the one that we survived in order to propel somebody to do something about the Fed. I don't think that in a globalized financial world that we can necessarily say that we don't need a central bank when everybody else is going to have a central bank. I understand what you're saying, and I agree that they've become overly intrusive and that the decisions that they've made on our behalf have not been in our best interests. But I do hold out hope that the institution can be fixed and not shuttered.
Well, I've lived in Washington, D.C. now, Daniel, for 16 years. And, I've heard a lot of politicians come in here and promise reform of like specific government agencies, and the Fed's, just gotten politicized and bureaucratic like pretty much almost any other government agency. So, any time a politician comes in here and promises radical changes, the main parasites here in D.C., the lobbyists, the bureaucrats, they don't want any change at all. So I really don't see.
Of course they don't. But from what I've heard on the grapevine about your town, they're locked out right now.
Well, Trump's being sabotaged a lot. So there's a lot of people within the White House and also Republicans who are blocking him who don't agree with a lot of what he's saying. So it'll be interesting to see what happens in the next couple years election for Congress. If the Democrats gain back control, they'll block him even further. I mean, look, for the Obamacare, he wasn't even able to pass the version that he basically promised. So he has delivered on some of his promises so far, but I know a lot of Trump supporters that are angry that he hasn't delivered on his Obamacare promises yet.
Well, these things are going to take time. He is just one man, and he's got to get his party to work with him. I think you would agree with that.
Yeah, and so I think, things are going to get worse before we get better. So you think then that the Fed, a couple years ago with Obama running, they would have fought a 20% or more drop in asset prices? They probably wouldn't have allowed it without more QE or intervention. But now that Trump's running things, you think they would allow a 20% or more drop in asset prices?
I get that sensation. Again, I don't want to bring the conspiracy theorists out of their caves, but I do get the sensation that they're going to be much more risk tolerant going forward. But again, in my view, it's for political purposes.
Now, do you think that Trump would select someone like Richard Fisher, or do you think that the Federal Reserve, the people inside there, would basically block another person with the views of Richard Fisher and his background from getting on the voting, the Board of Governors Committee again?
Well, it's not the people from the inside; it's the Senate. It's the Senate who would confirm Richard Fisher if he was nominated for one of the open vacancies. It would be up to the senators. And all you need is to get sufficient amounts of dissent in on the Federal Reserve Board to make things start to happen.
Yeah, you mentioned in
you've had 2 dissents in 20 years.
And we know from your book how Bernanke reacted about those dissents.
He didn't like him at all. And the recently released 2011 transcripts also allude to this fact as well, that Bernanke did not like dissent, and he certainly didn't like my former boss.
Yeah, I think it's great how you revealed in your book some of the intricacies there about the bureaucracy and how, the Fed minutes are basically scripted and edited now. So people act like, oh, they're being given, a good look inside, but things are, carefully crafted.
I mean, I think that people believe that I think there's a growing recognition that the minutes are manipulated. But the fact that dissent went away, the way of the dodo bird in 1996 among board members, right after transcripts began to be taken, tells me something. It's very, very telling.
Well, I enjoyed your book a lot. I think there's a lot of good details in there because, there's just not a lot of transparency at the Fed, unfortunately. I would like more transparency, and I think your book did a good job about showing, the day-to-day operations of things and how even though you have a good track record and you have market experience, a lot of people you're working with at the Dallas Federal Reserve wouldn't even listen to your opinion, despite the fact that you have a track record for making good market calls.
Well, that's part of the problem. It's part of why I got fed up, and it's part of why I wrote the book and took the time to do so.
If our listeners want to go buy the book or sign up for your newsletter, how do they do so?
They go to DiMartinoBoost.com. They sign up for the newsletter. I publish every single week, and I try and be entertaining while I'm at it. I think you might think I'm slightly entertaining. I just wrote about Buford T. Justice from Smokey and the Bandit, which you were too young to have watched. But go to DiMartinoBooth.com. Follow me on Twitter at DiMartinoBooth, and hop on Amazon. Go to your local Barnes & Noble, the Barnes & Noble up here near SMU. It's got a big set-up display right now. Go to your Barnes & Noble. Download me on Audible. Download me on your Kindle or your Nook. I'm everywhere. The book is doing great. Read it and then pass it on.
Yeah, I listened to the audiobook version of you reading it, and I wrote you a 5-star review. I agree with a lot of the stuff in the book, but, I think, the political bias of so many people in power right now, everyone talks about finding these thankless, objective, selfless bureaucrats that, won't be corrupt and won't put their interests first. And, the people in D.C. claim to have found those, but I know a lot of bureaucrats, and none of them are like that. So I would like to see, the checks and balances on the Federal Reserve and also audits. But thank you for your time today, Danielle. I really appreciate it. And hopefully this will help you sell some more copies of the book and get the discussion going about change at the Fed.
Thank you so much. And I look forward to speaking with you and coming on your show again.
Mo and I are trying to raise $1,000 per month for our Patreon account. We have over 2,600 viewers per YouTube video, so if we can get most of our loyal listeners or all of our loyal listeners to donate $1 per month or up to $5 per month, which would be amazing, that would cover most, if not all, of the money that we need. So we also accept one-time donations if you go to the wallstreetformainstreet.com website. We accept donations in cash via PayPal. Fiat, you can donate there. You can donate Bitcoin through our Bitcoin wallet there on the website, or you can donate gold and silver. We have a gold money account, and we also accept mailed donations of physical gold and silver. Thank you guys for listening, and we appreciate any and all help. Please forward it to friends. Okay, bye.